There's some questions I've been hearing on a regular basis, and they go like this. Has the stock market moved too far, too fast this year? Is inflation going to stay on the rise? Is the economy really recovering like we think it is? And did you change your last name? Like I said, I'm hearing these often, so I'm going to take the next few minutes and give you the answers and some statistics with thanks to Chief Economist Brian Westbury at First Trust. So I'll start with this reminder. The stock market does not go up in a straight line. Even while in the midst of a bull market, like the one we're currently in, there's always a chance for pullbacks and corrections. Now, pullbacks are up to a 10% decline in price from the most recent high. And corrections are a 10 to 20% sell-off. And these are considered to be healthy, normal occurrences for the market. While research indicates there have been 38 declines of at least 10% in the S&P 500 since 1950. Now, that equates to a correction about every 1.87 years on average, with an average duration of about 6 months. Now, the S&P 500 reached new all-time highs in April and again in early May. Perhaps with the exception of the stock market rally getting a little ahead of itself through the first 4 months of 2021, and some of President Biden's tax proposals, investors appear to be facing few, if any, significant headwinds at the present time. While the bulk of the economic news has been excellent, there's definitely more good than there is bad. Companies are hiring. CEOs are the most optimistic that they have been in many years. Manufacturing is robust despite having to deal with supply chain bottlenecks. And consumers are spending. It's how they're spending is what's really standing out. Okay, consumers have expedited the transition from brick and mortar shopping to e-commerce during the last year. Reports show us that the US consumers spent $78 billion online in March of 2021, which is up 49% year over year, according to Forbes. Now, in the first quarter of 2021, US e-commerce sales grew by 39% year over year to $199 billion. And Adobe estimates that US e-commerce spending will total between $850 billion and $930 billion in 2021. And it expects spending to top $1 trillion in 2022. But what makes those statistics even more attractive is factoring in that Americans continue to be extremely disciplined when it comes to managing their consumer debts. Now, it's not a surprise. Inflation is running hot, right? But you're asking me, is it transitionary and temporary, or is it real and here for the long run, right? And how long will the Federal Reserve let it go, and for how long? So when does that transition and cyclical become more secular and serious, right? So these are important questions, and some would say only the Fed has the answers. What we're seeing is that what we're experiencing is really what we're calling reflation. Because yes, it should be up in comparison to last year. Because this is a natural response to a dramatic increase in consumer spending, persistent unemployment, and the Fed's continual money printing. So the Fed has stated that they also believe that inflation is overstated because of the comparison built on year-over-year basis versus, this time last year when prices were drastically falling compared to this year, where consumers are continuing to spend more. So many of the current economic pressures are in transition, as jobs will continue to be filled over the next quarter and the quarter following, and supply chain issues do begin to decrease. So the Fed will release a policy statement on June 16th, and we'll get more insight on their opinions as the economy continues to evolve. Now, as for my name and my changes, yes, Ben and I got married in March, and I've changed my name to Laura Warda. So I have updated my email address and website, yet if you use the old ones, that's okay, you'll still get to me. And because I have a tendency to do a lot of things all at once. I also passed my designation exam for the Chartered Financial Consultant designation. And with an increased vast knowledge for planning, I've also added the letters CHFC after my name to go along with that. So that is all for this update. If you have more questions about how this applies to your investments or your financial plan, please reach out to me so we can schedule a time and talk more about that before the end of the summer. Thanks.